Well, welcome everybody. This is my video update for today, and I'm joined here with Kirk Alexander with Prospect Mortgage. Kirk, thanks for coming on and talking. So what I want to do is I wanted to get your take on interest rates. So give me, like, where have we been on interest rates? Where are we going? Kind of what are the trends? What's going on with that?
My goodness, for the last 6 months we've been floating right around 5%, give or take 1/4%, right? And the last quarter last year, the government pretty much announced that by the first quarter of 2010 that they were going to get out of the mortgage-backed security market and it would become an open market free to go out and be a competitive product. Well, as that occurs, as that comes about, we're going to see interest rates go up.
The interest rate's going to go up?
Yes, sir.
Okay.
They're going to go up. And so what you see now is some of the products that are coming online are promoting adjustable mortgages. They're starting to adjust the market, the mentality. The consumer should be prepared to look at interim arms, things that are fixed for 3, 5, 7 years, 7, 10 years, those sorts of things. So they're trying to kind of get prepared for that change, because you can see interest rates go up probably 5 3/4, 6%.
Okay, so what I think what you're saying then is there's some interest rate risk that the banks and lenders maybe are trying to push off on other people by getting them into adjustable products they don't have to deal with, because they're kind of predicting that they're going to go up.
Exactly.
Okay.
Exactly.
So the question I get all the time is, and I hear this all the time when I say, hey, we've got a great house, and they always say, oh, but we think interest rates are going to go down. We want to wait. So what's a good strategy, knowing that potentially the long term, over some time, the interest rates are going to creep up to 6%?
Yeah, well, they have to go up in order for our economy to stabilize, in a sense that we become a competitive product, okay, where interest rates are attractive to other investors outside the United States. And so in order for them to compete with the other products that are in the same realm, they have to go up. They can't stay where they are. They have to. So that's why I think with the tax incentive for the $8,000 first-time buyer coming to a close, your move-up buyer, that incentive that was short-lived coming to a close, you'll see that interest rates will move up. And therefore, we believe that the interest rates will be, probably still relatively low historically.
Yeah.
But probably going to be looking at adjustable mortgages more.
Okay, so what time frame would you say, if today they're at 5, when will they probably be at 6 on an ongoing
I would say
basis?
sometime in summertime you're going to see it. You're going to see that hit pretty hard.
Okay, so we got about 6 months of good buying time before it's all gone.
That's about it, yeah.
Tax credit. That's expiring. How much is it? And do people in the military, is there an exemption for that?
There's an extension of a year on military folks. So with that whole incentive coming to a close at the end of April, if they're in the military, they still got a year before they won't be eligible for that any longer.
Okay.
So yeah, you'll see it's going to end. It has to end.
Yeah.
There's no way that they can keep that going and continue to stabilize the market. That incentive it's a very good incentive for a first-time buyer. Take, for example, if somebody buys a $120,000 house.
Okay.
It's a pretty normal, typical thing for us here in Las Vegas, right? They put 3.5% down. They win. They come out ahead. They make money just on the fact that they closed the transaction.
Yeah, sure, because they pay $4,000 in fees, but then they get an $8,000 tax credit. It's like free money.
They're getting paid to buy the house.
I agree. That's good. Awesome. Well, thank you very much.
Oh, you're very welcome. Thank you.